Hey, what's up everybody? I'm Jason and you're watching my channel Micro Investor. So in this video we're going to be talking about a stock that has been getting a lot of requests in the comment section, and that is a Magnite, ticker symbol MGNI. Now what they are is they are a company that specializes in advertisements for streaming platforms. So they're kind of a streaming play, kind of an advertising play, but they are a very interesting stock. The stock has gone up quite a bit here recently. It has made a lot of moves starting in November, and it's gone up a good amount in a short period of time. So a lot of people are buzzing about it. So we're going to cover the stock. We're going to talk a little bit about the stock itself, and then go into a little bit of details about the company. And like usual, I'll go into my opinion at the end of the whole thing. So as we get into it, if you guys don't mind, please do me a huge favor and please be sure to smash, destroy, and then I'll hit that like button, because that helps me out with the YouTube algorithm and helps spread this video to more people that might find it interesting. Also, subscribe if you have not already. And while it still lasts, get your 4 free stocks on Webull. And if you want to help out this channel even more, I do have a Patreon with a new private Discord chat. Link is in the description. Now let's get to it. So let's take a look over at Magnite. So Magnite is an American online advertising technology firm based in Los Angeles, California. The company formed following a merger between Rubicon Project and Talaria in 2020. So I guess originally this company was founded in April 20th, 2007. So it's weird to go back that far. So let's take a look over at Magnite stock. Their ticker symbol is MGNI, and their stock is trading for $32.50 at the moment, and their market cap is $3.64 billion. Now, to get an understanding why this stock is so popular right now is because just look at the way the stock has been performing. As we can see, it's been going between like $6, $7, $8, $9 for the majority of 2020 is how it's kind of been acting. But as we get into November, we can see that the stock really started to break out. So we'll start here at November 13th is when the stock really started to break out here. Let's look from here to here to where we're at now. The stock has gone up over 200%, and it's had multiple little rallies here. So from November 13th to, let's say, December 4th, the stock went up about 100%, and then from that point it went up another 100% within that time. Now let's take a look at the investment presentation that they have set here. So they provide software that enables publishers across all media, including CTV, which is connected TV, video, audio, and display, to maximize revenue via programmatic trading. They have 200 publishers in 50 plus countries, and 150 plus billion daily impressions, and 600 employees. They're the largest sell-side platform, CTV leader, omni-channel and global, and machine learning and software driven. When we think about how the way that ads are brought to us with streaming, say if we're listening to podcasts or music, there's ads that are delivered to us in those platforms, as well as when we're watching videos on streaming services, we're watching them on our cell phones that are taking, we take those everywhere, desktop computers, our laptops, our TVs. We're pretty much given streaming advertisements everywhere, and majority of people are watching their advertisements on streaming more so than they are watching regular TV advertisements. So this is becoming a much bigger industry. And something we can really see is that consumption and buyer behaviors are changing, and especially now in the time that we're in with the pandemic, with how it has changed everything, how it has changed TV, how so many people have jumped on streaming platforms to use that as their normal TV, how it's passing more time, it's keeping more people entertained, and cord cutting continues to accelerate. There's an increasing amount of CTV is ad supported, and programmatic is driving the future of CTV. So there's a whole lot of advertisers that are just looking to jump in on this market and throw their money into this over regular TV. Because, I mean, think about it. A lot of the shows that I even watched, that I've even were interested in watching from regular network TV from back in the day, I'm just now catching up on those on streaming platforms. It's a lot more easier for me. And they have some pretty big clients, so their platform for the advertising is really big, because they offer ads for Hulu, Sling, Fubo TV, which is one we're going to be talking about in another video here soon. But many companies, Pluto TV, Zumo, Vizio, Crackle TV, Tubi, Bloomberg, NHL TV. There's many different streaming applications that they were offering ads for. So let's take a look at their finances with their most recent reportings. So their Q3 highlights and Q4 trends. Revenue grew 12% year over year in Q3 2020 to $61 million on a pro forma basis. CTV revenue grew 51% year over year in Q3 2020 to $11.1 million on a pro forma basis. Expect strong CTV growth in Q4 2020. Adjusted EBITDA was $13.7 million with a 23% margin in Q3 2020. Expect Q4 2020 revenue of $72 to $75 million. Expect adjusted EBITDA margin for Q4 2020 to be approximately 30%. Now, looking at their balance sheet, though, this is really interesting here. So, balance sheet highlights. Cash and equivalents, last report on September 30th, 2020 was $103.8 million. And that's their total cash and liquid assets. And they have $0 in debt. And even on their previous quarter before that, they also had $0 in debt. So that's really nice to see. I do like seeing a company that has no debt. That's definitely a big plus. And let's look at the revenues here. So CTV made up 18% of the revenues at $11.1 million. Mobile was 48% of the revenue at $29 million. And desktop was 34% of the revenue at $20.9 million. So the total revenue for Q3 2020 was $61 million. So a lot of that coming from mobile. That's really impressive. And that's not surprising, to be honest, because mobile would make up not just phones, but also tablets. And that's how majority of people are watching even this video right now. And the majority of all this revenue comes from the United States, which is $45 million, which is 74% of the revenue. And international is $15.9 million in revenue at 26%. So all in all, a lot about the stock sounds really great. A lot of the information I do like. I like that they have no debt. I like their revenues, how it's growing. But the only thing that really worries me is this right here, this big growth that the stock has had from this point to this point. That's a lot of money. That's a big increase. When a stock goes from $9 to over $30 in just a short amount of time. That's a little scary, in my honest opinion, because that's one of those things. What I like to say is, if you're going to ride the bull, you also have to be prepared to get ran over, which is something that can happen at any time when buying something that's on a run like this. But all in all, I mean, I think that there's a lot of great things with this company. That is big caution for me, and it's just something that I worry about with many of these stocks that are popping off right now, is that anything can happen. You can always expect that there's going to be some sort of pullback at some sort of time. So that would probably be, for me, that would be when I'm most comfortable to invest into it, is when there is some pullback. And anyways, but I'd like to hear everybody's thoughts on this stock. Is this something that you're invested into or looking to invest into? And what are your thoughts on this company? Anyways, so as always, please like, share, comment, and subscribe. New videos coming out on my channel all the time. Thank you guys for watching. I'll see you all in the next video coming very soon.